Hey everyone, welcome back to another lesson with Accounting with Ms. G. Today we're going to be looking at the effects of the accounting equation. Actually one of my favorite sections of accounting. When doing this section of work, you really need to know something known as a dead click. So your teacher might use this already. I know I use this in my classes. But basically what this does is it's telling you which accounts increase on which side. So your debtors, expenses, assets and drawings increase on the debit side. Your creditors, liabilities, income and capital increase on the credit side. So if you're writing your assets on the debit side, you're telling me they're increasing. But if you wrote your assets on the credit side, the opposite side of where it's happy, you're telling me that they are decreasing. So it's really important to know. So when you start your exam, when you write your exam, just jot down dead click, nice thick line down the middle, so that you know that these four accounts increase on the debit and these four increase on the credit. You're going to unfortunately need to know if it's an asset, so like vehicle, trading stock, equipment and assets, stationery, water and electricity, rent expense are expenses. Your types of liabilities are things like your loan and your creditors control when you owe other businesses, and income is like rent income, commission income, current income and sales. So just to keep that in mind. When looking at the accounting equation, there are always going to be two accounts that are affected. Just to keep in mind, if it's a CRJ or a CPJ, if that's where this transaction would go, one of the accounts is always going to be bank. And then you've got to figure out what the other account is. If it's a debtors journal transaction, one of the accounts is always going to be debtors control. And then the same as if it's a CJ transaction, one of the accounts is always going to be creditors control. So if anyone knows me, they know that I'm an absolute lover of highlighters. And so it's best to just maybe bring a highlighter or two into your assessment and then to highlight the key things that we're looking at when dealing with effects of the accounting equation. Okay, so let's jump into it. The first transaction reads, K. Ruby deposited 15,000 Rand into the business bank as her capital contribution. Okay, that would be a CRJ. So one of the accounts is bank, because that's where the money's going, and the other account is capital. Now you've got to ask yourself, is your bank, is your asset, remember bank is an asset, is your asset going up or down? Your asset is going up because the owner put money into the business. What side does your asset go up on? Up on the debit side. So over here we're going to write bank, because your assets increase on the debit side and decrease on the credit side. So jot these kind of things down when you're doing your assessment. What's the other account? The other account is capital. So we can fill that in here because that's the only missing place. But we also know that capital, which is also increasing, increases on the credit side. Now we've got to show its effect on the accounting equation. So it's assets, owners' equity, and liabilities. We know that bank is an asset. You said to me your bank is going up, so your asset is going up by 15,000 Rand. Now capital, we don't know, you might not know which effect it has. Does it have an effect on assets, owners' equity, and liabilities or liabilities? And the easiest way to remember this is an acronym called DICE, which stands for drawings, income, capital, and expense. So your drawings, income, capital, and expenses all have an effect on your owner's equity. The only time it would really be a loan or a liability is if it is a loan or if it is creditors control or a mortgage bond. Alright, so your capital is part of DICE, so it's going to positively affect your owner's equity by 15,000 Rand. Your drawings and expense have a negative effect on your owner's equity, and income and capital have a positive effect on your owner's equity. Your liabilities would be dololo. Alright, so that's the first one. Next one, cash sales of 4,800 Rand, cost price 2,400. So let's just break this up. Just ignore what's in the brackets for now. Cash sales of 4,800 Rand. So we know one of the accounts is again bank because it belongs in the CRJ. The other account is sales. they've made a sale, they've sold something. Bank going up or down, if you've made a sale, bank is going up. So bank is going to be debited. What is the other account? Sales. And remember, sales is an income. So it's increasing because you're making more sales. So I definitely know that that's correct. If bank is an asset and you said it's going up, it's going to be plus in the asset section of 4,800 Rand. What's happening with your sales? Your sales is increasing. You've made more sale, and sales affects owner's equity because remember it's part of income, part of DAS, and it has a positive effect on the owner, and your liabilities is naught. The second part over here you need to enter in. Okay, so it's important to note, I always like to use my highlighters as an example. So let's say, for example, you own, or I own, a highlighter shop, Kirsty's Cokies. My name's Kirsty. And someone comes into my business and purchases 2 Cokies. So they buy 2 Cokies, they pay for it in cash. So my bank has gone up and my sales has gone up. But during that time, what has decreased? What's actually decreased is my trading stock, because I had 4 highlighters to trade for money. Now I only have 2. So my trading stock has gone down. So trading stock is an asset, and that is decreasing. And then, obviously, if I want to keep Kirsty's Cokies running, I need to replace those items at some stage. I'll buy them from my supplier. The cost of me to pay for these items to replace them is called your cost of sales. So cost of sales is going to go this side. It's just important to notice that if you get something like this within brackets, it's going to use up 2 lines, and this is how it's always entered in if it's from the CRJ. Your bank's gone up, sales has gone up, your trading stock, which is an asset, has gone down, and your cost of sales, which is actually an expense, is increasing. Alright, so if your trading stock is an asset and we say it's going down, in the asset column we're going to write a minus now, and it minus by 2,400 Rand. Cost of sales is an expense. It has a negative effect on the owner, so it's going to be minus 2,400 Rand. Your liabilities is naught. Okay. You paid 4,000 Rand towards a loan to Standard Bank. So if you've paid for something, it means that it's in part of your CPJ. And one of the accounts again is going to be bank. So if you're paying for something, what's happening to your bank? Now your bank, remember, which is an asset, is going down. Assets go down on the credit side. So I'm going to put bank over there. And what was it that I paid for? I paid for my loan. So bank being an asset is going down by 4,000 Rand. And my loan, which is part of a liability, is also decreasing because what's happening is I'm paying for my loan. So the amount that I owe now is less. If I'm paying for a loan and it's going up, that's definitely not going to be a good loan to take out. There's never ever that there's going to be a situation where you pay for a loan and it increases. If you're paying for a loan, the amount of money that you owe is going to be less. So it's decreasing your liabilities, decreasing the amount of money you're responsible to pay. It has 0 effect on your owner's equity. Next one is drawings. You took trading stock to the value of 6,500 Rand for personal use. Okay, so this is something where it doesn't affect your bank account. This is something that would actually go, if you do accounting in grade 10, into what we call the general journal. So trading stock is one, and personal use, which we call drawings, is the other account. But we're going to use the same principles of looking at assets. Which one of these is the asset? Or trading stock is the asset. What's happening to it if you're taking trading stock out? So if out of Kirsty's Cokies I decide to take 3 highlighters for myself to use when I'm teaching, I've reduced the trading stock during that time. So my trading stock is going down on the credit side because remember it's an asset. And what is going to go on the debit side? Drawings. And drawings actually increases on the debit side. Okay, so you said trading stock's going down, so my asset's going to be minus and 6,500, and drawings has a negative effect on the owner, so it's going to be minus 6,500. Liabilities is naught. So now that we're just almost halfway through, remember the accounting equation is assets equals to owner's equity plus liabilities, because that's what we're looking at, the effects that these transactions have on A equals to OE plus L. So when looking at your answers, you must make sure that these two columns added up together equal to your assets. So let's just check. If I look at the first one, if I take plus 15,000 plus naught, does it equal up to my assets? Yes. If I take minus 2,400 plus naught, does it equal to my assets? Yes, it does. So always just check that whatever you've written in your assets column is equal to these two added up together. Then you know that you've done the right thing. Next one you do is sales on credit to A. Peterson worth 6,500, cost price 4,000. So now you sold something on credit to A. Peterson. A. Peterson in this situation would therefore be a debtor. Okay, so this would be something that you'd find in the debtors ledger, debtors journal. Okay, so we've made a sale on credit to A. Peterson, 6,500 Rand. So now it doesn't affect your bank account because what's happened is A. Peterson has come in, they've purchased an item or highlighters, whatever it might be, and it does not affect your bank. It affects the debtor's control this time. Remember, so if it goes into the DJ, one of the accounts is debtor's control. All right, so let's have a look. Did they make a sale? Yes, so your sales has increased. Debtor's control is an asset, and that is also increasing. So you'll see it looks very similar to another transaction we did just now. Debtor's control is increasing, and you've made more sale by selling stuff. Even if it's on account, you still sold it, your sales has gone up. Debtor's control is an asset, and it's going up by 6,500. Sales is an income, and it affects your owner's equity positively by 6,500. Loan is 0. During that time when A. Peterson came in and they purchased highlighters, let's say they just purchased one, they purchased pink, what happened to your trading stock? Your trading stock went down. Now Kirsty's Cokies needs to replace that highlighter, and the cost to replace that highlighter would be called cost of sales. So over here, your trading stock is going down, which is an asset, and your cost of sales is increasing, and that is an expense. Trading stock is decreasing, so it's minus. Now we're going to use the amount in brackets, minus 4,000, and cost of sales, which is an expense, has a negative effect on the owner, so it's minus 4,000. Liabilities is naught. Have a look at number B and number E. They are almost identical. Bank sales, cost of sales, trading stock. Debtors control sales, cost of sales, trading stock. The only difference is that your bank has changed to debtors control. Because essentially the same thing is happening. A customer comes in, they purchase an item, so they purchase this highlighter. If they're paying it for it cash, it's affecting your bank. If they're putting it on their account, it's affecting debtors control. But you've still made a sale, you've still sold this highlighter, you've still lost trading stock, and you're still going to need to replace it, so therefore increasing your cost of sales. So the two accounts have literally just changed, because this is a CRJ, they've paid for it now. This is a DJ, they've put it on their account. Okay, let's look at number F. You purchased trading stock to the value of 27,000 Rand via EFT, so because you've purchased it now, it's going to affect your bank. If you've purchased something, what has happened to your bank? Your bank has gone down. So bank is decreasing, and it's an asset. What is on this side? Your trading stock, because your trading stock has gone up. I purchased something, I want it. So you pay for it and you leave with trading stock. Okay, so your trading stock is an asset, and that is going up. It's increasing by 27,000 Rand. Now I've written it like this for a reason, because you'll see that bank is also an asset, and your bank has gone down by 27,000 Rand. So essentially, your asset has changed from money into another asset, which is trading stock. So plus 27,000 is for the trading stock one. Just highlight it for you. So the trading stock is this plus over there, and your bank is what has decreased, so that's minus. So essentially, it's plus minus 27,000, and these two, owner's equity and liabilities, would both be naught. Because remember the formula, A equals to OE plus L, plus 27,000 minus 27,000 gives me naught. So naught equals to naught plus naught, so I know that it's perfect. So be very careful. If they are both assets, it's going to be plus minus. So the business might have bought a vehicle, that's also an asset, it would be plus minus. Or the business would buy a equipment, that would also be plus minus. So if they are both assets, then it is looking at plus minus. Number G, you purchased equipment on account for 15,000 Rand from JB Logistics, invoice 114. So now you're purchasing something from another business on account. What we call that is your creditors control. Belongs in the CJ. If you're not sure about the DJ, CJ, go have a look at my earlier videos, and maybe it'll be able to help you a bit. But a CJ is recording when the business buys an account from another business. They're buying from JB Logistics on account. So they've purchased equipment, and the other account is creditors control. So again, now we don't have bank, but we do have equipment, which is an asset. Equipment is the asset. If you've bought something, even if it's on account, is it going up or down? It's going up. So my equipment, which is an asset, is going to go over here. And my creditors control is also increasing because now I owe more money to JB Logistics. And that is a liability. Okay, so equipment is an asset, it's going up according to our column, plus 15,900. And my liabilities, I now owe more money to JB Logistics because I've bought an account. So my liabilities have gone up by 15,900. My owner's equity is naught. Third last one, number H. You received a loan from Absa Bank worth 60,000. So if you receive something now, it's going to affect your bank accounts. Is your bank going up or down? If you're receiving money, even if it's a loan, your bank is going up. Bank goes up on the debit side. And what is the other account? Loan. My liabilities are increasing because I have taken out more money. So my bank is increasing by 60,000 because I've received money from the bank. You will, yes, pay it back at a later stage. When you do, you would enter it in like C because your bank's going down and your liabilities are going down. But here your bank's going up, you're receiving money, so therefore you are liable, or you owe more money, and in this case you owe money to Absa Bank. And your owner's equity is naught. Next, you received 15,000 Rand for rent of a storeroom. So if you're receiving money now, it's the bank account that's being affected because this would belong in the CRJ. So your bank is increasing, which is an asset. And if you're receiving money for rent, we call it rent income. You need to be specific. You can't just write rent because we also get rent expense. So rent income, big shocker there, is an income. Your bank is increasing, so it's plus 15,000, and income, rent income, has a positive effect on the owner, so it's plus 15,000 over there, and this is naught. Last one is you bought equipment to the value of 12,000 Rand. So you bought equipment to the value of 12,000 Rand. Because you bought it now, it doesn't say it's on account or on credit. It's going to be part of the CPJ, so it affects your bank. So what's happening to your bank if you've bought something? it's decreasing. So bank is an asset which is going down, and your equipment is an asset as well, which is increasing. Okay, because that's also an asset. So remember, they are both assets, just like over here. So what are we going to have in the assets column? A plus and a minus. So your bank is going down by 12,000, and your equipment is going up by 12,000. It doesn't matter in which order you write it in. You can write it plus minus or minus plus. Your owner's equity is naught, and your liabilities is naught. So just have a careful look that everything speaks to each other. If you pay careful attention, you'll notice that every time that your asset or bank, for example, is on the debit side, these are plus. Over here, like your bank is going down, so this is a minus. We have more assets here. Bank's going up, so these are plus. Debtors control, which is an asset, is going as a plus. Your trading stock, which is also an asset, but this is now a minus. So just have a look. The most important thing is figuring out what is happening to your asset. Is your asset increasing? Then it goes on the debit side, and this would be a plus. Is your asset decreasing? Then it would go on the credit side, and this would be a minus. So they need to speak to each other as you go. But yeah, as I mentioned earlier, you have to understand and know dead click to know which goes on which side. Especially dealing with your assets and expenses are a big one here. So figure out which one is the asset, what is happening to your asset. If your asset's increasing, it's being debited. If your asset's decreasing, it's being credited. And then just fill in the other account wherever it might belong. But definitely jot this down somewhere on your question paper before you start your exam, or as soon as they say you may start writing, so that you have the necessary information. All right, I really hope this helped. Good luck. One step at a time, and just tick it through. Don't forget a highlighter. It's always very, very useful to have around. And don't forget to subscribe to the channel, and I really hope that you have a lucky day.